Guys, welcome back to the channel. So I want to show you how we managed to catch this beautiful trade. It played very well. The problem is that it was having some small drawdown. So this was a 1 to 4 that played for about 2 hours. So it went more than this. Actually the trade has gone for a more than 1 to 14, I guess. So this was the trade. This is the checklist that we used to get the entry, and this is the time where I called the trade, you can see, and then the rest now played out very well. This was the time when I had already gotten some entry. You can see it is same 7.5 pip stop loss, and then let me see, there was this one. This is when it was nearing take profit, and then this was when I closed at a 1 to 3, though some of us closed at 1 to 4. So this was the proof. As much as I don't show proof in YouTube, you can join and check here if you are interested. It's free. Now this is the time when the trade hit take profit and I got an alert from TradingView. Now so the trade currently has moved to about 1 to 14 so far, but the pullback was very heavy. Eventually the trade moved. As you can see, the trade has already moved. So that is why this strategy is very powerful for people who want to equally swing. You have the opportunity to swing peacefully without wondering so much. You can see the way the trade has moved deeply, and if we wanted to swing, we would have swinged it to this level. Now as you can see, this is the trade so far, already 1 to 14 from yesterday. This is about less than 24 hours, and the trade has moved this level. Now so how did we come up with this trade? We do daily markups immediately before London open. We do daily markups. Like today we are taking gold trade and others. As you can see, today's trade are posted here. You can join, it's free. Then you'll be asking a question. So this is the trade. This is a trade I took today, also took profit on it, gold, but we are still waiting for another entry, so we are discussing it here with other members, so you are free to join now. So let me go to the daily time frame and explain this trade very fast without wasting a lot of time. So let me clear everything out and then go to the daily time frame. From the daily time frame, now let me see, from the daily time frame, this is the current day we are into. So let me go to the previous day. Now the previous day, that is the previous day. Now this is the checklist, and the checklist, part 1 of the checklist says that we need to make sure that if we are selling today, it means that yesterday is sold. That's simple. If you are selling today, yesterday is sold. That should be it. Now if you are looking at many pairs, then you have to take at least 3 days of one direction. Like in this case, 3 days, then you buy, 3 days, and then you sell. So there are some simple rule there. You can always ask in the group. We are very active, few of us there. So yesterday is sold. That is the most important thing. You can also add this to your arsenal. Yesterday is sold. So what do we need to do? We need to also look for sales this day. So that is just the most important part about number 1. If yesterday is sold, today we are selling. If yesterday bought, we buy. Is that simple? You can see if you are only selling these days, you would have made more money. Same to if you are buying this market, you would have made more money. So that is what we do. And then we go to 4 hours, because that is what the checklist is saying, that we need to go to 4 hours. So we need to go to 4 hours and look for the entry. So 4 hours, what do we do? Trending daily trading days, first 4 hours alignment. That is what we are looking for. What does alignment means? Alignment means that if you are selling, 4 hours should have started taking the lows of the previous 4-hour candle. Now as you can see, this is the first 4 hours of the day, it has already taken the low of this. That means that that is confirmatory alignment, and therefore any pullback on top here will just be liquidity hands. So we just know that at any point we should start selling. That is why we go to the next point. Now we can see that this was a movement down, and then we had some small fair value gap, you can call it, here in 1 hour. But in 4 hours there is an IFC candle here, not necessarily, yeah, IFC candle, institutional funded candle, that that was engulfed using this. So you can see that the fair value gap has been tapped here. That is the discretion part. So we don't expect much pullback, and if we see it, there's no problem. Now this is aligning before London, so we have to wait until London open. Now we can see it really pulls back again to look for more liquidity, and then now we go to London open. London opens at 11 AM my time, so that is when I'll be waiting for two 1 hour candles to close in our direction. So I go to 1 hour, and then hope to see, at least after alignment, I need to see if the two candles close in my direction. Now let's see the first one. This is the first candle, not yet London. Then you can see two candles have already closed in my direction, so that is a sell candle, as you can see. So already two candles have closed in my direction, but there's always a catch. We need some fair value gap. That is what is stayed in this particular entry portion. So this is not yet London open. So when you go to 15 minutes, we start by looking at 5 minutes to see if at all this movement, as you can see, this movement here lacked fair value gap, and therefore this is just a recipe for liquidity. So ideally I would expect all of them to be liquidated, and this high goes. It's not a must, but it is a priority for me because I don't want to get stopped out prematurely and then the trade goes my direction. So that is why I prefer to wait for liquidity, and that is what is happening currently on a trade we are waiting for of gold. As you can see, I've said here, you can pause the video and read this ones on or for yourself. So the gold trade is here. So currently we are having now the problem is that it's so efficient and there's no liquidity. So that is what we are waiting for, same to this particular portion. So we can see that London opens, but we don't have liquidity. So if we don't have liquidity, there are two options. You can just go heavy in, but just know that it is low probability, or you can wait. So I chose to wait, and you can see this is the first candle of London open. It was very heavy. Equally, you can look for imbalances here and look to take trades again. You can look to take trades, but personally I will prefer to see all this being liquidated first, and then we can now sell. Alternatively, you can still look for a simple scalp somewhere here, something that I did today on gold, but this will not give you much reaction since there is liquidity above. So I would wait for it to push up to that particular point and then see if I can get a trade from that. Now you can see it did not even push to this fair value gap, something like that, most probably because of this IFC candle, and this may not be a qualifying fair value gap. You need to know characteristics of a good fair value gap now. So that one does not happen, so we would wait for, now after this tap you can look for entry if you see candle close in our direction, which is a bearish candle. So from this you can look for entry on 5 minutes to see if it will give you push down here. But like I said, there's liquidity on top, so I would prefer to wait until that liquidity is raided. As you can see, it gave sell, but it never sustained. Even in 5 minutes I couldn't get entry here, so it's just waiting game. And then now you can see that the raiding is already happening. So when that raid is happening, and you can see it is now starting to pull back, let's just see. Now the raid is successful and all the liquidation is done. Now I would only look for entry when this candle here do not close above here. If you don't have a big candle closing on top there, then you avoid it. As you can see, it was liquidity because immediately we get this, this should have been now confirmation that this was just liquidity, and therefore you can enter from that particular point, and that is what I showed here. It is what I showed here. Immediately we got that. That is what I showed here, that now this thing is ready to sell. So if you don't want to refine too much, this was supposed to be your entry. Stop loss just above here for a 6 pip stop loss. For a 5, can have it a 6 pip stop loss. I like it on round numbers. So then you target a 1 to 4. Now this is the thing with it. You would have been tagged in. You would have been tagged in like that, but again, this should have been a break even. Should have break even here. So that should have been a break even. You should be on a break even, and then you get stopped out immediately on break even. So this becomes invalid. Now we go again and look for another entry. Now immediately I saw this, I went to I was in 5 minutes actually to look for re-entry. So I saw this and then looked for entry on 5 minutes somewhere here. 7 pip stop loss, 7.5 pip stop loss, because after break even and there is still reaction like this, 1 to 4 is the risk to reward that this I recommend you take. And if you want to go more, go 1 to 6. So the trade came and then immediately started tanking like that, and then it went straight to take profit for a 1 to 4. Now anybody who wanted to hold more, it was at liberty. Some people held it, and in the group here some people held it and they took more than 1 to 4. So that was the trade.